Hey guys, Chuck Barone here. Thursday, July the 14th, 2022, and welcome to the show. We're going to start the show like we always do by thanking everybody for taking the time to view these videos, to support the channel. You guys have been overwhelming, and I don't know if I could find a way to describe exactly how grateful we are for all of your guys' support. Thank you very, very much. Today's a big day. We got a lot of stuff to go over, so let me get into it. The stock market today, surprisingly mild day in the market. Stocks were mixed. The NASDAQ actually rallied up and eked out a gain for the day. I got to say that's kind of astonishing to me. Who's buying, tech stocks and NASDAQ stocks right now? Any of you guys out there bottom fishing, looking for deals? I don't know. Some of this stuff just seems really odd to me and unexplainable. Not like a normal, regular trading pattern, that's for sure. The bond market, St. Jerome works his magic again. We got the 10-year bond sitting at 2.96. We have a total inversion now of the yield curve. The 30-year bond is actually a lower rate than the 2-year bond. I got to ask, if you're a professional trader, master of the universe, one of the smartest guys on Wall Street, why would you buy a 30-year bond with a lower rate than a 2-year bond? If you could buy a bond, they were both the same, but this one had a higher yield, which one would you, had the same term, but this one had a higher yield, and they were both basically the same as far as safety goes, which one would you pick? Well, again, none of this stuff in this market today is making very much sense to me. I guess I'm just a traditional trader, and this must be the newest great thing. Buying bonds into rate increases, buying long-term bonds with lower yields than short-term bonds. It's a phenomenon that I wish I had the brain power or the experience to explain, but I don't. It's something funky's happening here, that's for sure. The dollar still massively strong against other currencies around the world. 108.6 on the dollar index, going up again. The world currencies just look like they're getting killed by the dollar right now. I guess it's a flight to safety. People feel like they want to be in the dollar rather than yen or euros or anything else. The dollar actually has achieved complete parity with the euro today. I'm going to go actually probably today or the next day and go buy myself a couple $1,000s worth of euros. I feel like once the European Central Bank gets into the game and starts to raise rates from negative where they are now, the euro will have a little bit of a comeback. I think this could be an easy 10-point pop, a 10% bump in a real short term. Metals today, because of the strength of the dollar, getting hammered again. Gold and silver getting crunched. I think a lot of this is designed to shake out the weaker players. I think that's why you're seeing silver being hammered more than gold right now. Guys that don't have a lot of money to invest tend to want to go buy several ounces of silver rather than one gold coin. So they buy the silver, and now as the market's turning against them, they run to the exits. The weaker hands are kind of getting flushed out of the market. Oil down fractionally today, still pressure on the market. They're dreaming up this idea that there's going to be less demand. What about the millions and millions of barrels the U.S. is going to have to buy to refill the petroleum reserve? What about all the other countries? What about Germany with their gas threat right now with Russia? I think that the oil and gas markets still have a way to go to the upside. We are getting finally a little bit of relief at the gas pump here in Las Vegas. They said gas was down 20 cents. That's pretty impressive since a barrel of oil is down a lot more than that as far as percentages go. Bitcoin had a great day today. Bounced up over almost $1,000 today. To 20,600. I think, as I was talking about the last couple of shows, it's developed this new trading trough between about 18,500 and 22,000, and it's kind of been trading in that range again. We're looking for a breakout either way. Now, if you're trading in Bitcoin and you want to get out of this market, this is a good time to be selling into these rallies. If you want to increase your position in Bitcoin, it's a good time probably to be buying these dips while it stays in this trough. Look for a breakout though, because if it breaks out above 22 or below 18.5, that's going to be a pretty good indicator of where it's going in the short term. The big news today in the market, news you need to know, the P.P.I. numbers came in today. The number was plus 11.3%. Now, what does that mean, guys? Let me kind of take a second to explain it. Yesterday, we got the CPI number. CPI means Consumer Price Index, and that's an index that measures the cost of goods and services when you buy them at the point of purchase, right? So the cost of goods and services, according to yesterday's report, went up 9.1% year over year. The PPI is the Producer Price Index, and what that is the cost of creating these goods and services, which are then bought by the consumer at the point of purchase. The PPI number was up 11.3% today. Now, the PPI is more of a leading indicator. It's going to tell you where prices are going in the future, while the CPI is a little bit of a lagging indicator because that's telling you the prices that have been paid recently over the past month. If you know the cost of goods and services are going up 11.1% year over year, up pretty substantially from last month, you can safely assume that the cost of the CPI is going to continue to rise. Producers tend to not eat these expenses themselves, pass them along to the end buyer. So, get ready for more price increases, higher inflation numbers coming up on the CPI. Now, this has led to some talk. I've been with the talking heads and articles I've been reading and different stuff I've been researching, talking about a possible jump this month from a 3/4 point rate increase on the overnight rate to a full point increase. Now, that hasn't happened since the 80s inflation. It did happen yesterday, though. Canada raised a full point, and other governments around the country are taking this inflation serious. I personally think that the Fed's going to stick to their 3/4 point. I think they want to see how the market's going to react to that, how much intervention is going to be needed, because when they raised that 3/4 last month, they sure had to get in that market to stop the bond market and the stock markets from going bananas crazy. Quick note about real estate. Right now, real estate is starting the correction pretty heavily. It's happening very quickly. 50% increase in price drops on houses listed here in Las Vegas. I'm assuming that that's going to be starting to happen all over the country. Sellers are starting to understand that they cannot sell the houses for what they were getting even just a couple months ago. The prices are correcting. People can't buy at those prices. So now you're seeing price reductions, more houses coming on the market, staying on the market longer. It's really an interesting phenomenon to watch because these sellers are so used to their houses selling in literally less than a week in a lot of cases, in days, and getting paid $10,000, $25,000, $50,000 more than the appraised value of the property. It's quite a shock for them now seeing their house on the market for 30, 60, 90 days and not one person coming to look at that house. So now the real sellers are starting to reduce those prices. It's going to start a kind of a snowball effect where once that snowball starts rolling down the hill, it starts accelerating and getting bigger and bigger. The correction is coming. It started. It's the snowball starting down the hill. Get ready to see more and more of that coming up in the future. I was reading, they said mortgage demand is basically dried up. They were saying mortgage demand is down 40%. I tell you, this is bullshit, because let me give you the live example of our company. Small company, just a few agents. We do 15 to 20 loans a month typically. Last month we did two. That's it. So that's a lot more than 40%. I think we're pretty much your middle of the road mortgage company here in Vegas. People are doing 60% of the business they used to do recently. I'd like to know how. In other news today, the unemployment numbers came out. Unemployment was up again. Not big, but it's starting to turn where more people are getting laid off. More people are claiming unemployment benefits. It's again like the idea with real estate. The snowball's just starting to roll down the hill, and you're going to see bigger and bigger and bigger numbers coming with unemployment. We had bad earnings. J.P. Morgan came out with their earnings today. This is one of the best, sharpest companies in the whole world. Their earnings were down 28%. It forced them to suspend their stock buyback, which is like, oh dear, where's the fainting couch stuff for Wall Street guys? They have to tighten their lending standards. And Jamie Dimon, one of the most respected CEOs on Wall Street, certainly a person that the politicos and other people listen to, is warning that we have a hurricane coming. Morgan Stanley, another great Wall Street company, a big investment bank, they came out with their earnings. They reported that their investment bank revenue was down 55%. Wow. So now that means basically all the business on Wall Street started to dry up. Banks like Bank of America, UBS, Oppenheimer, and a whole bunch of different banks are coming out now with their forecast, slashing their targets for the S&P this year, slashing their growth, the ideas of how much GDP would grow. It's all coming, like we've been warning you guys. It's all now starting to be seen in the real numbers. Let me wrap today's show by talking about some of the things that's been going like we already did. Now, what you just heard me say, and all of these things about unemployment and real estate and earnings collapsing and everything else, should not be any surprise to you guys. We've been warning about this stuff since the very, very first show when we said we're already in a recession. What have we been talking about? We said that big inflation will continue to persist. As you can see by these numbers, and these are numbers that I'm guessing were maybe not perfectly accurate, you can see we were right there. We told you corporate earnings would collapse. Now we're seeing the beginning of that. We told you real estate would correct bigly. I was predicting, probably around $100,000 off the median price. Now we're starting to see that happen. We told you that unemployment would start going up. People would start laying jobs off. I've been talking about the companies that are laying people off. Now we're seeing it reflected in the unemployment numbers. We told you that the government would be no help. Well, guess what? We were pretty much right about that too, guys. To finish today, though, I want to give you guys a little bit of good news. I hate all this gloom and doom every day. I feel like the prophet of doom here every day. But there's some good stuff coming. There is some good news at the light at the end of the tunnel, so to speak. The people who've been watching this show and have been following the things we've been preaching on this show. Number one, start to save money, targeting 10% of your income. Number two, start putting that money away, building up your FU fund, so to speak, to get yourself your first 25,000 put away in case of emergencies. We've been telling everybody every single day to invest defensively, not to think about gains right now, but to protect the money you already have. Well, let me say this. The people who've been listening to what we've been saying are probably doing better than the market right now. And here's the good news. For all of you guys saving money, for all of you guys doing the right thing, here's your big reward coming. When this all finishes, everything is going to look like it's on sale, guys. Picture this. In 2008, when the big kablooey happened, the last time we were in a situation like this, the house median price in Vegas was $380,000. When it was over, that same house was $118,000. Does that sound like a bargain? We're going to be seeing, maybe not quite that dramatic, but we're going to be seeing those kind of bargains. Houses, stocks, cars, boats, campers, RVs, houses and condos are going to be like, literally, I know the corporate money will be in big. Jewelry, you'll be able to save big on vacations, especially overseas with the strength of this dollar. You're going to, pretty much everything that has any real value to it is going to look like a smashing sale compared to the prices we're looking at today. So get ready for that. Hold your money tight. Do the right things that we've been preaching about in our videos, and in a very short time, all the stuff your heart's ever desired is going to be there, had for a bargain. That's it for the day, guys. I really appreciate you taking the time to watch these videos. We really appreciate your support. Special shout out to my man, Greg Manarino. If you're not watching his show, make sure to go over there and get a look at his videos. Smart guy, super funny too. Tomorrow, we're going to do a little bit of depth talk, a little more talk about gold and silver. I've been getting a ton of questions about that in the comments and in my emails. We're going to talk a little more in depth about that tomorrow. Batten down the hatches, guys. The storm is getting closer. Until we meet again tomorrow, have a great day. Thank you.